right, what's up, everybody? Just trying to get stuff situated here as we go live for non-farm payrolls. That's right, today is the first Friday in July, therefore, non-farm payrolls. So, yesterday we had a good number from ADP. I mean, it almost doubled what was expected. I think like 200 something thousand was expected. We hit over 400,000. If we go into today, you can see that expectation of non-farm payrolls for June is going to be lower, 225K. That could in fact be higher. The participation rate, not so important. Average hourly earnings is going to be important. Obviously, the unemployment rate is going to be important, not for CAD, but for USD, obviously. So they're looking for 3.6%, which is lower than last month. That means the jobs market is very, very sticky and strong, which is good. It keeps inflation down, or they want it to go higher, but obviously that would cause a recession, and that would make inflation come down a lot faster. However, inflation's at 4%. The Fed has a 2% target. So we'll see what happens today with the jobs number. There is already like a 90% expectation of a hike for July. So that will be at the exact day is going to be the 26th of July. So you can see 92.4% chance that they are going to hike rates. So since the ADP number came out good, that's probably the reason why Bitcoin came off so hard yesterday. But before NFP comes out, which is, less than 15 minutes, let's go look at something real quick right here. Here's your long-term hodler supply. You can see basically it's moving higher since the lows were put in, which is a good thing. But a bad thing that I noticed here is on the 10,000K Bitcoin plus hodlers. This is the big boys, 10,000 Bitcoins or more. You can see that since price has been moving up based on this news, this has been moving down, which is, probably a good reason why we're having difficulty moving up. Something else, the accumulation trend score here is starting to fire up. Let me get off the moving average. You can see that the accumulation trend score is starting to fire up. So people are, in fact, buying Bitcoin up at these highs. Yesterday, here, let me get over there. Yesterday had a big move to the upside, took out the fresh yearly high, and immediately had a bearish reaction. That is typically, not always, but typically that is a bearish signal. So what can you do moving forward? Well, if you would like, you could potentially short at today's high. Today's high is right there. And if we go back into the intraday time frame before the NFP number comes out, if you get a spike up to there, you could take a swing or a short position. This is going to be your profit taking area, as that is daily support. All right. So if you get a big push above, then you might not want to be looking for that short just yet. But that's where we currently are. Once again, we're at in the middle of the freaking range. This is your open right there. This candle. This little 5-minute candle right here, that's your open. I bought the open. As this pushed down, I bought it, and then price traded away. I have since taken profits, because if you go into the 4-hour time frame right over here, you can see that price pushed up to 4-hour resistance. That was where I took profits. So from there to there, boom, boom. So here we are. Like I said, currently sitting in the middle of the daily range. This is yesterday's range. All right, all the way down to the close. So all of this stuff right through there is yesterday. And, that day or today's high matches up pretty good with old 4-hour support right there. So if it is going to roll over, we could probably assume that it would happen then. Here you are on the hourly with your RSI. Let's blow this chart up. Here you are on the hourly with the RSI just trending under the 50 there. So yeah, the sellers are still in control on pretty much every single time frame except the daily, right? But anything under than the daily, the sellers are in control. There's your 8-hour, you broke down. So coming back into a retest of that 4-hour, you broke down. Hourly, you got massively. Oh no, you didn't. You got massively oversold here, but you did it yesterday? That is strange. I figured this would, I mean, obviously that's hourly divergence or bullish hourly divergence. The fact that you definitely made lower closes but higher closes on the RSI could indicate that maybe it wants to go higher. Where do I want to be a buyer? If you are a bull, then I would watch daily support. And as you can see right here, 4-hour support is right there. So a wick below that, and then possibly if it finds support there, you could be a buyer anywhere in this area here, target there. And if you're short, like I said, if you're bearish, then you would be looking to short if you got a spike above the high. Now, we got 8 minutes until it comes out. So would I recommend you take a position? No. The reason for that is simple. You are in the middle of this day's range. And when you're in the middle of the range, that literally means there is no trade, no high probable trade. You can look right over to the left of where my crosshairs are. You can see an old daily support right here. That could be an important level to watch too, but that puts you in the middle of the daily range. So with the ADP number that we got yesterday, I'm surprised that this isn't higher. So maybe they know something that we don't. But the real number that I'm watching is the unemployment rate. We want to see if this number ticks up or down, as that would tell us something, right? If it ticks up, if it gets a higher than it's supposed to be, that would be higher than reading should be taken as negative or bearish for the USD. However, the USD is the world reserve currency, so that's probably going to be exactly the opposite. You have the news, and then you have the reaction to the news. So it's impossible to predict what is going to happen, no matter if it's good news or bad news. But we can watch price, and we do know what levels we are watching price at. If we take out today's low, then you leave it alone. More than likely, it's probably going to trend lower. I don't think you would get a spike all the way back down there, take out today's low, and then move higher. Because you can see there is heavy sell pressure going on. The fact that we had this and then that, it's just, it's not good. I never like to see that, especially when you're talking about major levels. And the fresh 2023 yearly high is a major level. The fact that it had such a bearish reaction up there just lets you know that there was a lot of people that had sell orders setting above 31,447, whether that is to exit their position or to start a new short position. There was a ton of selling up there, and as soon as price got up there, it left that area with the quickness. I mean, it literally got there, and then within 4 hours, you were breaking down. And then right here is today's open. So that's your daily range currently from there to there. And it looks like it's trying to melt a little bit lower. So we will see what happens here in 5 minutes. Good morning, everybody. Lovely sunny UK. Good morning, Johan. Yo, man. What's going to be today? Well, there it is. I've told you what it's going to be. It just depends on your bias, right? I can't tell you if you want to be a buyer or a seller. You have to know that. Human biases are typically, in my opinion, very bad thing to have. You just essentially let price tell you what's happening, and then you make your decisions based on that. Price can be very manipulated, and it can be annoying occasionally, of course, but it's done us pretty good so far. As I take a drink of water, we shall wait. So yeah, currently I had a long position there. I'm going to go ahead and close that position down, take all the profits. Why not, right? And so that way I can open a new position depending on what happens when the numbers come out. I would like to be bullish on Bitcoin. I have been wanting to be bullish on Bitcoin ever since it broke out, but with the bearish divergence on the weekly, the bearish divergence on the daily, it's not really good when you have double divergences like that. So that could be another reason why there was a lot of selling taking place. But like I said, divergences, once they play out, they're done. You didn't quite play out on that divergence move on the daily. Typically, you want to see it get close to around the 50. That's when you can say divergence has been played out. And then you can look for new buying positions if the asset, is going to continue to go higher. ES is down a little bit on the day. You can see right there, just a little bit. You got bearish divergence on the daily on that asset as well. But, we knew about that for a long time. Same scenario over here on the NDQ. No, there was no divergence. Quit calling me, it's too early. Anyways, yeah, there wasn't any divergence there, but a pullback is expected. Obviously, you've been in overbought territories since this candle, so you can see you've had a meteoric rise since then. So obviously we are looking for a pullback. So that doesn't make me bearish. That just makes me say, yeah, there's probably going to be a pullback, or there could be a pullback. You do have a double top here, so on the daily, people will get bearish for that as well. But we'll see what happens today. That, like I said, that CME, that should be priced in, right? They're going to price that in. We also have CPI comes out before you get July's rate decision. So that's also going to be an important number. A CPI can come down from 4 to lower, like 3.7 or 3.5. That would be fantastic. And that could say that the Fed won't rate hike. So last month, this thing moved up and down all month, depending on the data that came out. But they've pretty much already said they're going to hike at least 2 more times this year. And the market is taking it as it's going to be this month. So we just started the month not too long ago. And so far you've had weakness. All right. So your monthly candles are bearish pretty much across the board. Right. So let's do it. Got 1 minute. These are the levels that we are currently watching. What's up, Brandon? Thank you for being here, my man. KF, good morning. Nice. Good morning. Good mornings. Let's go. Let's go. Let's go. Been here the whole time, normally on replay crew. Cool. Thank you for that. Appreciate it. Good morning, good people. Good mornings. Good morning. Good morning, Tom. Pedro, hang on 1 second. UNG on the weekly, please. Thank you. Yeah, just give me 1 second because the news is about to fire up. This says 2 minutes. It is wrong. It is 1 minute. All right, so here we go. That's higher. That's a beat. That's a miss. So should be bullish for risk, and that's the same. So it should be bullish for risk. I don't know if I'd buy that in the middle of the range like that, but if you did take profits up there, let's see how this plays out real quick. I do believe you would get a run above that wick high, even if you are going to go lower. So let's see here. Come on, price, go up, take out the swing high. Let us short you into oblivion if you want to go lower. And remember, I won't be live for the market open at 9:30 because I got things to do today. But if you are, remember, whatever happens from here until 9:30 could be sold off, or you could get the exact opposite reaction. But we do want to see it push up there and reverse. You do have hourly resistance right there. 4-hour resistance, you're trading well above it. The last 4-hour close was looking pretty damn decent, if I don't say so myself. Get up there. There it is. There it is. So if you hit the sell button, make sure that you put your stop above that swing high. Shut up. If you sold that, make sure your stop is above the swing high, right? Because if it goes higher, you're probably wrong. And let's see here. Are we going to be bullish Bitcoin, or are you going to remain bearish from yesterday? Yesterday was a nasty bearish day. Nasty. So typically you would expect continuation to the downside in a situation like that. Look at the ES. It hasn't even done anything based on that news. ES is open. It's not really like, it's not doing anything. I'm watching Bitcoin on the other screen. Bear with me here. I must have got rid of it. S&P 5. Oh. I mean, nothing is happening on the futures. It's moving up there. So why is the ES not being affected at all? Oh, I bet I have delayed data on this. I do. I have delayed data. That's what's going on. SPX 500 USA US on Oanda. Yeah, there's the spike. And did it take out? It did. That's yesterday, though. So today's high would be right there. So it took out today's high with a vengeance. Bitcoin is still, straggling around under that level. So take profit. Take profit one would be here if price continues lower, $30,005. And then definitely you want to more than likely take profit two down there at daily support. That is if it rolls over. That is if it rolls over. And it has not done so yet. So government payrolls for June, 47 last month. This was expected. 7.0K, that's got to be a misprint. So, yeah, if you were only expecting 7,000, you got 60. All right. 306, 225, 209. So this is going lower. And then the unemployment rate stayed the same. Stayed the same. Even with yesterday's fantastic ADP numbers, you stayed the same on the unemployment rate. So that's weird. All right. Good morning. Good morning. Yep, Carl been okay, read that. No worries, thanks. Let's go. Get in, Carl. Yeah, I mean, if you would be taking the short right here, it'd simply be based on yesterday's bearishness. However, you know that, if you've been hanging around me for the longest time in an asset that is clearly and obviously bullish, you typically want to look for the buying opportunities. And even though yesterday was a friggin' disgusting day, it did pull back to daily support and you are bouncing. It's not a very big bounce in relation to yesterday's range, but it is a bounce nonetheless, and you've got a whole day of trading to go. It is Friday, but still, this was a very, very, very bad week for trading simply because there was only 3.5 days of trading, like legit for the US. Like there was 3 hours on Monday, and then the markets were closed on Tuesday. Let's look at what the Euro's doing. Euro is breaking out to the upside, which is what we want to see. So that is good. When the Euro goes up, that is good for risk assets. And this is if it closes above its open. So if today closes bullish, it will be considered a breakout. However, Monday could be a trap. Like this could be a trap because we know traps exist. I know it's so difficult, right? But what we typically do, we don't buy the breakouts. We wait to make sure that the breakout is legit. And it looks like it is a legit breakout. The pound dollar short trade that I took yesterday obviously is been stopped out. We took profits on that. So when I say that I've been stopped out, that does not mean I lost money. It actually never means I lost money unless I tell you that I lost the trade. No, that was a fantastic trade yesterday. Made quite a decent amount of coin on that trade. Then we took profits, moved our stops to break even, and then price came right back up and stopped it out. That is why you must always, always, always take profits. Ethereum traded right up to 2-week resistance and bounced off of it. I mean, perfectly. Absolutely perfectly. And then we would want to see the dollar selling off. Let's get the ES off there because we know now that it's lagging data. Freaking. This isn't lagging. Well, it could be lagging by 15 minutes. Yeah, this is lagging too. NQ, what the? I don't have that data package, so it's lagging. But let's go look at the dollar. That's not lagging. Boom. So there we are. Fresh test. This is wrong. Let me get it right. That's going to be right there on that white line. That's your 2023 open. You can see that you tested it again. After you broke down here, came up, tested it, and then tested it, and now you're breaking down. There's also a trend there that we were watching. It's pretty much exactly the opposite of the euro. So yeah, that's going to be a breakdown. And that's what we want to see. Also on USD JPY coming into a quarterly resistance level. And I have a few peeps inside the Trade Talk Discord that took this short. I didn't because I'm in the short from the very top. So I'm just holding it. But I would love to see this roll over and get back down to like, say, 123. But we'll see how that plays out. Like I said, I'm short from like almost the very tip top tick. I took it based on the dollar liquidating its previous week's high. So that's the reason I got short. I shorted it on the USD JPY. But we also knew that the Japan, the BOJ was going to, in effect, try to do something to affect that. So it was a perfect short. And if you fib the range, you're also in the area you would expect people to start looking for fresh shorts or new shorts. As you can see, that is correlation. Confluence, my bad, not correlation, confluence. Multiple confluences. Quarterly res and the 702. So, but it's still structured bullish on the daily. But if you are like me and you think there is potential for this thing to break down, then you can look for shorts on retests. Right there's an old daily resistance level right here, and it puts you just above yesterday's low. So any pullback up in that region could look pretty damn good. All right, so the Bitcoin short. This was a trade we took a long time ago, obviously successful. This short looks like it's going to be successful as well. All right, so here we go. I mean, one could take profit depending on how much leverage you got. Like right now, the short entry for me is setting at 24x or 24%, but that's at 50x leverage. And I got it pretty much worked out. If you take 50x leverage, then it's gonna be like if you're using $100. If you take 50x leverage, just to get in and out will cost you $10. So you need a 10% move to make money. I'm up 35% on the short. Take profit one coming into range. Like I said, it was just simply based on yesterday's move, continuation from that. And if it continues to go lower, you will be situated at a pretty decent spot as long as it continues to make lower highs and lower lows from here. Right? We do expect a bounce whenever you tag support. That's why I got long last night. I was just looking for a bounce to this low right there. And it got there. So I took profits and then shorted that because of yesterday's ginormous move. And plus this thing here, I mean, I don't typically like to be a buyer when there's a lot of accumulation going on. And I don't like to be a buyer when there's a lot of accumulation going on while big Bitcoin wallets are not buying. Well, let's be clear. These are just wallets, so they could just simply be closing them or moving them off the wallet or whatever. On chain it's an indicator is basically all it is. It does pretty good though. So we got 16 minutes on the hourly close. If you close above this candle's close, then you might want to rethink the short or at least take profits while you have a decent move here. It didn't tag our first initial take profit zone, but we still got time. Maybe. All right, USD CAD, what a short. Yeah. Yeah, all right, so I'm just gonna name off the things that I basically called to look for here. USD CAD short, CAD Swiss short, pound USD yesterday short, long Euro USD. I also shorted Euro USD. Let's go look at USD CAD. Right there at a level that I figured would definitely go up to this area here. Why not? Why didn't it stop here? You broke down, closed under monthly support. Heath, why were you looking up here? Because simply that wouldn't have been a big enough pullback because it closed right there. So I wouldn't have expected it just to go to there and roll over. I expected it to go up there. Why? Because nobody else did. All right, nobody else did. You got multiple daily resistance levels in there that people would have shorted against. Nope. There you go on the daily. You even broke above the 50. This is when you want to start looking for shorts. If the trend is down. And on this asset from year to date, it is obviously down. There is your yearly high. This was your yearly low. You made a fresh yearly low. That is trend continuation. Therefore, you wait for a pullback into an old area of support or resistance. That's where you look for your high probable entries. And you can see that it went right up there and tagged it to perfection. And you are indeed getting a nice pullback up off that level. That's going to be due to dollar weakness. So yeah, it doesn't mean it will stop here. It could muddle around Monday and Tuesday, go up and run above this high and then roll back over again. Sometimes when you do it on the first tag, you will end up getting stopped out, but ultimately end up being right. So if you didn't short USD CAD this morning, you could simply wait and watch next week, because today's Friday. Next week, Monday or Tuesday, see if you get a run above that wick. If you do and it rejects and it drops back under this 2-week support level, you can take the short and move your stop above that wick, just in case it wants to play games. Now, if you get like a 4-hour candle closure above that, then you're not looking for the short. It's obviously wanting to go a little bit higher before it pulls back. But the short today obviously paid if you took it. USD JPY, we've already looked at. It's been struggling up here for days. Finally, it's breaking down. As you can see there, big move to the downside, and it's coming right back up to where the news happened. So that's, that's that. But CAD Swiss was a beautiful short. This is your yearly opening range. This time it didn't. So look, if you would have taken this short here, because it isn't a downtrend, you would have taken this short there. Right here, they got you. And look how many days later it was. You see what I'm saying? So just because, you get that tag of that level, that was still a fantastic short on that day, right? You hit it and then boom. So you made money on that trade. Once you moved your stop to break even, though, depending on where your entry was, what? Freaking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days later, it came back and stopped you out and then rolled over for the downside continuation. You just got to know that stuff is, it can happen. It doesn't always happen, but it can happen. But my whole thing is the reason is Canadian dollar. It was so strong for a few weeks. If we go look at the actual futures, Canadian dollar futures, you can see that it's actually bullish year to date, because it hasn't made a fresh low, a yearly low yet, but it has made a fresh yearly high. So technically this is Canadian dollars bullish. But if you look at it on a longer term scale, like I have here, and I have shown you literally, like, yeah, this looks like ultimately it could roll back over based on, the bear market of last year. But new year, new trend, it's still the same, but it just looks like, this might want to roll over based on this. This isn't very bullish on a quarterly basis, not compared to 2022's move to the downside. So if this is going to be a rollover based on what happened last year, then, it could end up weakening. And therefore you could just look on whatever strong. So Swiss franc has been strong this year, but it tagged a multi-month resistance. It's a monthly resistance. The last time you were able to close a monthly candle at one spot 13900 was back here in 2014. So it is a major resistance. The last time we came up in here in 2021, it rejected, and it rejected hard. But boom, big bullishness. Right back up to it. So we expect this to eventually break out. That's why Canadian Swiss was a beautiful asset to look for shorts. Now, I did get long Canadian dollar, Swiss franc. This is how we trade. At daily support, retests, I was long all the way up to there. So then we get up here, we lose our daily momentum, weekly momentum, everything momentum. At the yearly opening range, it's just the perfect area to take profits, move, take that off even, and apply a new short position, because you're sticking with the trend. This was just a bounce trade off of support. So this literally proves to you that you do not have to be, biased. if you simply just trade the chart, you don't have to worry about whether you're bullish on this or bearish on that, based on this, based on that. Literally just do the chart, dude. Just do the chart, trade the chart. Forget the biases. I do have macro biases, but when I'm taking trades, I try to keep those biases out, but I'm human. So sometimes, obviously, I make the wrong decision. Bitcoin is coming back up for a retest of hourly resistance. We still have not got that moved down to TP1, toilet paper 1, take profit 1. I'm not using random swings as areas of take profit, Danny. They are objective levels. So, yeah, I mean, ATR, it's an indicator. So it bases its analysis, its calculations are off the closes. And each time frame is going to give you a different ATR. So which ATR should you look for? If you're taking a short on a 5-minute time frame, are you watching the 5-minute ATR? If you're taking a long on an hourly, are you watching the hourly ATR? These are objective prices, price points. They're not random swings. There's literally a reason why those areas are there. This is objective daily support. How can I say that it is objective daily support? Because it's the lowest closing daily bearish candle. Therefore, until you get a daily closure under it, that is your objective support. This right here is intraday support. All right? Intraday support. It is objective. That's not a subjective price level. That's where price closed and then traded away from it. So obviously there was a reason for that. It is also 4-hour support. It is objective. And this right here is your daily range. So I'm staying within one delta, if you will, right? Because I'm not looking for a double X move on the daily range. I'm actually trading inside of the daily range. That's the difference, I guess. And sometimes, you know, if I'm watching objective levels on the weekly or the quarterly or the monthly, then those trades could literally last for the same length of time that I get the levels from, which is why I said this strategy is good and successful, whether you're an inside day trader or a swing trader looking for trades to last for a week or two, right? Or a monthly trader or a position trader. Like, the quarters look strong, so we're going to get long at the quarterly open because we expect quarterly continuation, right? They're all objective price points. This right here is where we took the short on pound yesterday. You cannot get more objective than that. What is that? That's the 2019 yearly opening range. Why did it not work over here? Because it broke out above it. All right, it broke out above it. So as long as you're closing dailies above it, then you leave it alone. But here is the first day that you closed under it. And this just happens to be the first day that you retested it. Hence, the short entry. Right there. Hit the sell button. Boom. And that was a multi-sigma move. That was like a almost 2.5 sigma move. Beautiful short. Took profits and it got stopped out right there. So it does look like the pound wants to have bullish continuation, right? But it also depends on how does today close. So This is an objective price level. You can't get more objective than that. It's just how you read the charts maybe makes it look subjective. But if you read it the way I do, like I said, this was your first day of breaking above that level. So we don't look for shorts. Not until this day right there. And then we're not looking for shorts until a retest of that objective price. And right there it was. I'm sorry, it was over here. Yesterday. I don't know why I'm looking at that. But it did it there also. So when it came back in for a retest, here is where I got short. Sorry. Right there. My bad. And then this was the area where objective support was. So boom. And here we are today. Right? It's an objective level. And you can nail, like, you can't get any better than that, right? That is a flawless short entry and a fantastic trade. It was a simple day trade. And I basically said if the dollar continues to go up and we get downside continuation on the pound, you will literally be sitting short from here, which could ultimately end up being a good trade. Like that white line was. I don't know if you were here yesterday when I discussed this trade that I took at that white line. It was based on an hourly level. And Jordan even asked me to come over on his channel one day to explain this trade. And look at that. And look what happened after. Right? Like 141 all the way down to there. Now, obviously, I didn't know it was going to go down that low. But if you just take trades based on objective price points, it just seems to work out for you. And occasionally you can nail a trend because you're waiting for those objective prices to get hit, as that's where your professional traders are looking to take entries. They're not looking at head and shoulders. They're not looking at this. They're not looking at that. Now, occasionally I will point those things out for people that do trade that way. But the one thing that you have never heard on any other YouTube channel probably, or any Twitter person probably, is first you got to get consistent before you can become profitable. Consistent. And you can't be consistent if you're trading head and shoulders, cup and handles, rising wedges, descending wedges. You can't be consistent because the trades that you're taking are absolutely 100% different. If you take a long because of a cup and handle and then you take a short because of another pattern, then those two trades were not consistent. You would have to take every single cup and handle trade to get the data to see if it works or not, right? Every single one, and only that. So essentially all I've done is I've simplified trading for everybody. If you watch these levels and you just wait for them to be tested, right? Get your yearly opening range first and foremost. That will tell you the trend. And then you can make objective trading decisions based on objective price points. Then you can get consistent. Once you reach that consistency, man, the sky is the limit. All right, so Bitcoin did come back up and close at that hourly res. Just under it. But it did close higher than this one and this one. So that does make me a bit skeptical on if you're going to get a tag of this support or not. Right? Because this is a bullish closing candle. It didn't close above this one, but it closed above all these three. So that shows you that the daily trend is still kind of trying to move up. Because the day is bullish. It's just up 1%, but it's still bullish. It's still green. Here is the open, so you need price to get back down to daily support in order to turn red on the day. That's if it rolls over, that would be the second area to take profits. This is first place. This, for me right here, down here, will be the area that I take profits. If this 30-minute candle closes higher than this candle, I'll be out of the trade, because it's not going my way, right? All right, so let me go ahead and look at some of these things. Yeah, go back to CAD Swiss for other people here. I mean, it took its merry little time in here, and it was very, very difficult. But this was the main level that we were looking for, the short. And Swiss pairs tend to be sideways a lot and wicky, right? I mean, just look at all this garbage, right? So occasionally you can catch a nice Swiss trade to that will trend. Hopefully this one continues to trend lower, as that is where we are trending last year and this year. Last year doesn't matter because last year's taxes are already paid. So those trades no longer matter. What matters now is the data that people have in the current year, right? The current year. So this current year, CAD Swiss is bearish. Objectively, if you don't believe me, I can pull up the 12-month, which is the yearly chart, and you can clearly see there. You tag the Heath level on a yearly basis and what? Rolled over. Candlesticks, my peeps. That's all you need. Now, I do use moving averages and stuff like that. I like to use, volume profile, as Forex.com does not share. Greedy bastards. And occasionally I'll use, moving averages. But it's more or less to help people identify trend. The problem with moving averages is if you're sideways and choppy, they don't help you. They will get you cut up. That's why I don't take positions based off of them. And of course, my favorite is the relative strength index. People just do not understand how important this tool is. It's literally telling you the relative strength of the asset, right? That's why bullish and bearish div is such a powerful information, because traders trade based off that stuff. And then if you look at that close versus that close, you clearly have bearish divergence going on there. And you're in a bearish trend. And you're at the yearly opening range. You just put all that stuff together and you can combine some pretty nasty looking trades. Nasty. Like I've said it since I took the trade on the USD JPY. I haven't found anybody that's got a better entry than I do on this short. Now, clearly, I didn't expect for it to be this bullish for this year. But I took it last year. I took it up there. I haven't seen anybody with a better entry than me on that. Now, if this continues, then I should have closed it, right? I should have closed it when you broke above the 21 on the weekly. That's when I should have just completely closed it. Right in here. I should have closed it out. Because clearly something else is going on here. And it was. It's called Japanese weakness. The JPY is so freaking weak. It's disgusting. There it is. I mean, bad. It's bad. I wanted to see it go up, because if that would go up, obviously it would help with that asset move lower, because the dollar is in a choppy sideways 2 down pattern. Right? 2023, there's your open, so you're sideways to down. You made a fresh yearly low. You haven't made a fresh yearly high yet. And you're trading under the yearly opening range. So You're more down than you are. Well, you're still, I guess you're still more sideways than down, is what I'm trying to say, but you are down. What other thing? Yep, Heath levels are the best levels. They're not my levels, man. I'm not the only one that trades like this. That's why they work. You know what I'm saying? And I have noticed a couple really, 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 really big Twitter dudes that used to never talk about yearly opening ranges and stuff like that are now talking about them. So it is glad to see that people are catching on. They're just not giving credit where credit is due. But I don't require credit. I'm trying to help people be better traders. That's it. Because one day I do, plan on stopping this YouTube stuff because I'm not good at it. Clearly, not good at it. But I will, when I get better, obviously, I will make a soup to nuts, like legit, almost course style set of videos that take you from beginning to end. Because some people still just don't get it. And then 90% of that is they just don't know when or where to look, and they don't understand how to manage their risk because you're not always going to be right. Just because you tag an objective level, it doesn't mean that's going to be the area it rolls over. For instance, here we are on Bitcoin right now. We did tag an objective level and we went above it. What was that objective level? The daily high. That is objective. So, the trade was off of yesterday's downside move. We would expect continuation. Also, since we've tested daily support this many times and we find ourselves right back down there again, that's the only reason the short had more merit than the long, right? But as you can see, just because that's an objective level, it doesn't necessarily mean that the trade will win. That's where managing your risk comes in. So like if you got 125x short right here, then it came back up and took out your stop. You lost a lot of money, more than 20% of the account, because depending on which broker you use, just using 125x leverage means you need to make 25% just to break even on your P&L. 25%. So if you take 125x trade and it just goes down 10% and you take you go, I'm up 10%, I'm taking it, boom. Then you look over at your P&L and it's less than it was before you took the entry. You're like, what the F? You got to manage your risk. And the best way to do that is use very little leverage. Only risk a certain amount of percentage points on each trade. Because eventually, over time, you will start getting those nice trades. Like just because of that USD Japanese yen short, I literally didn't have to trade the rest of this year. And that happened in 2022. All right? All you need is just one good trade and it'll make you profitable for the entire year. And more profitable than 12% or 8%, which is the S&P 500 average. So you can see here how this is playing out. It's stuck in this range. We need it to break down and drop back into this part of the range, which you're still in the range, but it does look like it's struggling to go lower. Another good thing is typically you don't want to take shorts on Bitcoin when the dollar's bearish, right? Typically you want to look for shorts when the dollar's bullish. The dollar's bearish today. You don't typically want to look for shorts when the dollar's bearish on Bitcoin because it trades against the dollar. You're up still 1% on the day. It's an objective level. Just on a 30-minute, you can see how it came right down to this last bearish close right there, right? It just doesn't, it's hard to look, right? That's why I tell people to look at the higher hourly or 2 hour or even 4 hour, because you can see the daily range more clear. The wicks don't really matter. It's the closes that matter, right? You got a wick well beyond this price, but the next candle opened, dipped down below it, but then got above it. And since you haven't been able to get back down there. So this right here was, more or less kind of like a bear trap, because if people were shorting it based on that being the Heath level, not realizing that today's a news day. So in news days, we do expect price to run current highs or current lows of the day during a high risk news event. It's almost a guaranteed thing. I've literally seen NFP prints come out and you run the high, and within 10 minutes you take out the low. So we've been in this trade almost over 30 minutes now, and it's not really going beyond or lower than our entry yet. So it's making the odds a little bit worse, if you will. But we'll hold it and see what happens here. I mean, we're also 15 minutes from the open, something I said I wasn't going to do. So I guess we'll go ahead and stay live for the open. Because at the open, you could run that high and then drop, which would really suck. But that's trading. So I'm sitting at 8.8% in profits. If I close the trade now, I will not make money because I am so levered up. You make awesome content, Heath, and huge respect for your time. Thank you. I appreciate that. Let me go back up, just see here, because somebody wanted me to look at something. UNG on the weekly. UNG. Natural gas. Yeah, I don't know what's up with this. This and oil. So energy is still low on the year. Some people thought it was going to be a good buy down here. The actual Natty Gat futures got down to like $3. There's your support, current support there. I'm not sure if this is a yearly open or not. No, it isn't. Yearly open would be over here, right there. So a lot of people are just looking for this to come back up, but I mean, it ain't. Oil looks bad too. A lot of people were expecting oil to go up, especially if they cut supply. If you cut supply, that should automatically make demand kick in, right? Should automatically make prices go higher, but it doesn't. It doesn't. You're still trading in a range here. You're still trading inside a maze candle. We did take a short on oil, but it was back here. It was right there. We took the short on that liquidity run right there. And that played out, but it's been literally sideways since 2023. Sideways to down because you made a fresh yearly low. That's your yearly high, so monthly support has held on 3 attempts to close below it. So oil, for some reason, is just keeping stuff down. There you go. There's your XLE, which is your energy sector. You're gapping down. So I don't know. Let me go back to UNG. Your weekly support is, your last support would be 622, but the deepest support is 597. This was resistance. You broke out, you broke out. I mean, there's a couple areas that I could look in there, but I don't like it. It's getting ready to be this. I mean, it is the summertime, so most people use natural gas to heat their house and for their stoves, stuff like that. Since it's the summertime, you're not going to really be needing to heat your house and all that. But it was interesting because Europe was supposed to have a colder year than normal, so they thought that it was going to bring that gas up. It did not. So I don't know. This, I mean, it's cheap, right? So if you're buying it based on the fact that it's just cheaper than it has been for a while, then I can see that as a valid reason to buy it. Natural gas. I would probably go to the 3-day. No, nothing there. Let's go to the daily. Yeah, all right. So right there's your daily support. Since this range has been formed, next daily support would be 641. That bearish candle there. So if it's going to keep going up, I would probably be looking to buy that 685 level. Just simply because you're getting so close to the 50. So if you get a retest of this price right here, watch it, see if it holds intraday. If it does, you can buy it. Yeah, you can. That's the area that I'd watch. All right, what else? We already looked at USD CAD. Let's look at it again real quick. Yeah, it's having a fantastic bounce off of that 2-week support. So I would keep watching this level. You have daily res sitting at just under, but this level is going to be the level if you get a retest of it. And that's probably literally going to be based on what the dollar does here on the open. See, this is a big support on the dollar. Why? It's quarterly support. Big support. You traded under it for a little while here, but you got back above it, and this is the first time you're retesting it. So, or you haven't yet, but you're close to it. Yeah, the dollar doesn't really have that bullish momentum. I expect it to break down. I want it to break down. My bias thinks it's going to break down, but price will let us know. Yeah, it was a good short. I took the short, Johan. Yeah, we're watching the 30-minute closes on Bitcoin. Let's see what the 15-minute looks like. Yeah, see, your 15 minutes, you're climbing, but you are coming up to 15-minute resistance. But the fact is you're still making higher closes. That's typically not what we want to see when we're short. We want to see this, right? Lower closes, not higher closes. It's the open is getting ready to happen. So 9 more minutes. I don't know what price is going to do, so I can't tell you to close your trade and then wait for a run above this high on the open and then short it, because I don't know if that'll happen, or I don't know if it will even go down if it does happen. I don't know what price is going to do. It's just levels that I watch. And I do have biases that help me with my trades. Like I said, today the short would be more valid simply because of yesterday's price action. I mean, literally in one day, you came all the way back down after making a fresh yearly high to daily support. Some people are going to call this an inverse cup and handle, or an inverse head and shoulders, and I would say on that, but could it work out? Yeah, and your measured move would be what? Right back up to 30,700 bucks ish, because you would have to use it probably right in this region as your neckline. Not a pattern trader. Seven minutes 19 till the open. CAD Swiss we looked at. Thank you, Brandon. I know that the levels are very good, but my question was about the stop after you enter the trade. Oh, yeah. I guess you could do that. I don't see no reason why doing that. In my let me say, what I've seen a lot of time is if you use that for your stop, then that almost makes your risk to reward less, right? I've seen that a lot. Sometimes I've seen other traders use that, and it literally makes their risk to reward like less, because you have to trade inside the ranges. If you use that, I don't know where the ATR is. I don't know I don't know exactly how to even do it, like how people do it, but I know in a lot of cases it seems to make the risk to reward not as good. Whereas when you trade inside the range, that's basically all you're looking for. You can't look for breakdowns or breakouts, because the market trades sideways most of the time, right? The market is literally sideways more than it is trending. So if you're constantly looking for breakouts or breakdowns, then what you're looking for is trend continuation, and you're actually looking for trend continuation, and that happens less time than price trading in the range. And that range is typically a larger time frame candle that you trade inside of. You see what I'm saying? Like, just look at this beast. How many months has it taken for it to just even get there, and it hasn't yet? Now, it did take out the low of that candle, right? You have taken out the low of the candle right there. But then after doing that, what happened? Price went right back into this range. And this right here, same thing. You took out that monthly high, and then price dropped right back into the range. That's not trend continuation. That's range bound. This was the first time that you got anything that even looked like trend continuation, because you closed lower. The next month, you closed higher. But then ultimately, you did get the trend continuation the month after. But you don't never really want to look for trend continuation. You typically want to trade inside of your range, the range that you have picked, whether it's a weekly, monthly, quarterly, or whatever. Daily, for instance. Like, we took out yesterday's low today on the open. On the open of this candle, you pushed down and took out that candle's low. But to the upside, you're still in the range. This is yesterday's range. See, once we broke down here, I thought that we were going to go lower because this low took out that low. That makes this a trap. But we had this radical move to the upside, unexplained move to the upside, and then got that move to the downside, right? So it doesn't always work. We would have probably been looking for shorts right in there, and we would have definitely got stopped out. This is just one of those wacky days like this here. Just stop everybody out, left and right, higher and lower. And prices trending back to the upside. We got 3 minutes, well, 2 minutes and 49 seconds for the open of the market. S&P 500 looks better than Bitcoin. See, S&P 500 would have hit our profit target. Yeah, shorting that would have been our profit target. You can see it got hit. But you're right back up inside of that range. You see what I mean? That's why I don't ever typically look for breakouts or breakdowns. But if they happen while you're short, that's fantastic. Like anybody that shorted that wick right there, trust me, they were happy to see that. I wasn't awake during that, or I would have, absolutely, I would have taken that short. Fresh yearly high after making 2 days of downside, after breaking out finally. Yeah, that's crazy. Bro, you're legit the only one out there that tells it like it is. Thank you. I trade the chart in front of me, not the news, not the Twitter, not the anything out there. Good. That's the way to do it, my friend. You legitimately have helped me create a new career for myself. You're a legend for doing this. Thank you, Carl. And I'm glad I was able to do that for you. GJ, please. Heath. Yeah, let's look at GJ. As it does appear we're about to get stopped out. Screw you, Bitcoin. Pound yen going lower. This has got to be yen strength because the pound is up today. See, it's up. So the fact that this is down, that means yen strength is kicking up today. It's massively extended to the upside. I mean, it's obviously in a bullish trend, but you need to wait for a decent pullback before you look for longs. If you think it's over and it's going to go lower, then watch daily res up there. I don't know if you'll get a retest of that or not. Depends on how strong the yen stays. But I mean, these are hard to trade either up or down because you're rocking and rolling to the upside. This does look like a nice move down, but it really isn't anything in comparison to like these expanding candles there. So it does look like a kind of a Wyckoff distribution formation where you're making like higher highs, but they're insignificant highs. So just wait for price to break down like really hard and then look for pullbacks to sell into. But you're still doing that while the bulls maintain control of the asset. Yeah. Like you could get all the way down to the 50 and still be considered bullish. So just if you're looking for a day trade, yeah, you could probably still short it as long as the yen stays strong. And you can watch the yen itself by just looking at the yen futures. And the yen is up big today. But it is after breaking down. This was a massive support. No, it wasn't a massive support. What is that? That's something. All right, there it is. It was a weekly support. So there you go, broke down. So yeah, today it's doing good. But that overall it's not doing good. Like this will be a selling opportunity. Now, I don't know if this is going to be the bottom, right? That's the one thing that you never know. but I would say more people are short USD JPY and pound JPY and all that stuff because retail traders love to try to short the top, right? And that's why trend continuation typically happens because retail traders are always trying to short the freaking top. Now, when I shorted the top on USD JPY, it was based on the dollar. It was not based on USD JPY. USD JPY was the best asset to short the dollar. And I waited for the dollar to make a liquidation run on a previous week's high. Once that happens, I shorted the USD JPY. And it was going straight up. That's not advisable. That's like a one-time fluke that it actually worked more than it will happen often. We can catch sometimes major market swings, highs and lows. Like we literally bottom ticked Bitcoin's low. Literally bottom ticked it. We waited for this wick to get smoked. And once it did, we got long Bitcoin. Boom. And then I bought it again on the yearly opening, on the fresh yearly opening. I even made a tweet on December the 31st or whatever the last day of December was. 31st. I tweeted, I'm going to buy Bitcoin tomorrow. And it literally like up. And we bought it here based on a liquidation run on that wick. So that's similar to what I did on the dollar. Right? All right, Bitcoin's trading up at the open. So here we go. 3 minutes into the New York stock market open. Bitcoin trading up. Why is euro pound doing up there? We want euro dollar. And then over here, why is euro pound on all of these charts? That's one asset I rarely trade. Because of this nonsense. Where's the S&P 500? Let's go. Let's go. Come on. Euro pounds into support. So if anybody is shorting it, be aware of that. You're shorting into support. If you short it up here at the open, it's fine. The open, which would have been 5 o'clock yesterday. If you shorted it then, you're good. Take profits because you are at support. Just because it looks like it's breaking down now don't mean anything, because look at yesterday. It looked like it was breaking down too, but it ultimately closed up. But it is bearish trade. You do want to short swing highs. But those higher highs. Right now, I wouldn't do anything. That's also weekly support. That actually would look good for our trade, but Bitcoin did the exact opposite. The S&P went up, made fresh lows, but now it's starting to trade back up. Bitcoin just went down and stopped. Started going right back up. Come on, euro. I'd rather be stopped out of this Bitcoin short because I want to see the dollar weakness. But I don't want to see euro break up that far and then just fall right back down. Man, that sucks. It needs to break out of that bull flag. It's actually not much of a bull flag anymore. When your flag pattern gets longer than your pole, it's not really a bull flag. It's just sideways consolidation. It's definitely not super bearish. It's definitely not super bullish either. But yeah, GJ it's one of those, just wait for support and look for longs. AAP when you get a chance. We'll keep Bitcoin up. AAP. Yeah, I called this out a long time ago. Because, I figure that they're going to eventually get this shit together. Because all the other advanced auto parts stores are doing good. So basically, I was like, anything under $70 is a good place to be a buyer. It looks like it's making a big, massive bear flag on a weekly time frame. So depending on where you bought it will determine whether you're in profit now or not. But if you're buying this for like a long time hold without any leverage, you can still buy it. It's still cheap. The people that, like the big investors, I mean, they're going, the board, if you will, the board will have to do something. If this is a managerial mistake, the board will fix it, right? They will fire whoever's fault this is to get there, because they don't like losing, because they hold billions of dollars in this stock. They don't like to watch billions of dollars decrease by 70%. Now, if the board is actually leaving, then that's a big no-no. Then you just gotta do your due diligence. Like Google advanced auto parts. What the F? You know what I mean? And start reading some articles of what the hell is going on with this company. Because like I said, it's cheaper than it's been in a long, long time, since the pandemic. And there in the town that I live in, there are 3 of these companies. 3 advanced auto parts in the town that I live in. Brick and mortar stores, 3 of them. They're a big company. That could be their problem. Maybe they have too many brick and mortars. There's only one O'Reilly's in this town. Where is that? Probably here. So there, look at the difference between O'Reilly. That's all-time highs. Right? And then look at AutoZone. I mean, you're just off all-time highs. Just off of them. I mean, these companies make money. Therefore, investors buy the stock. I wouldn't buy it $2,400.72 a share, but it would have been a good buy years ago. Not so much right now. But advanced auto parts has came off big time. So this is one I like. I do think it will end up trading back up to at least $100 easily. I like it. Germany made a deal to buy U.S. LNG, so I'm looking for longs on natty gas. Not bad. UNG depreciates 1% per year. That's why. Oh, okay, gotcha. It's not supposed to be a long-term home. Gotcha. Yeah, that's what I was saying. If you'd probably be better off trading the actual futures. Yeah, you're still at $2.63. But yeah, if that's legit, then yeah, you could see some demand pick up in this. There are other natural gases like Boyle. See, Boyle looks more like, but it looks like it does the same damn thing. So never mind. I figured there would be some other natural gas instead of just buying the outright futures. The rest of those are oil stocks. XOM, Exxon Mobil. Yeah. Energy sector is not doing good. Energy sector is not doing good at all. So hopefully that deal goes through. High nat gas with a rich Russia, right? Any thoughts on Grayscale bankrupt? I still have some GBTC and IRA. All right. Grayscale, I don't know. Grayscale is bankrupt, but their company is the company that owns Grayscale is insolvent. So the theory is as if they sell off all their Bitcoin in order to pay their bills and their, investors and stuff like that, then they're going to have to sell a huge portion of their Bitcoin, and they own a lot of it, right? So my advice would simply be, I would probably, I don't know, I'd probably get out of it, to be frank, just simply because of that massive problem. But at the same time, I mean, it depends on how much of it is it into your portfolio, how much of your wealth do you have in it, like, because GBTC, as of now, well, here, let's do it up here, is still pretty much trading with Bitcoin. I don't know where you're in it. Are you in a losing position? Are you up? You know what I mean? There's so many questions that you have to ask yourself, right, about it. But you do know, because of the video I put out the other day, that the parent company of GBTC is insolvent and being sued by the Winklevosses. Today, the 7th. So, yeah. Yeah, I don't know how to answer that for you because, like I said, I don't know how much you hold of it. Are you in profit? If you're in profit, take half and leave the rest on to see what happens, because this lawsuit could it could end up working out. Like, say somebody else comes and buys that other company, right? Say some big massive company just buys them out and fixes the problem, then GBTC may be all right. But if it goes the other way, if the mother parent company is to sell their Bitcoins to become solvent, that will affect the price on not just GBTC, but Bitcoin as well. Because they'll have to liquidate their actual Bitcoin holdings. And they own billions, I think. VOD long. UNG is levered 2x, Boyle is a 3x. Yeah. You got to be careful on those ETFs. I don't know any other natty gas ETF that just tracks the spot price. If you can find one of those, that would be better. Vodafone Group. I don't know what this is. There's a reason it's been selling off since January 2018. What that reason is, I have no clue. You are at quarterly support, but it's a long time ago support. Right there at 793, it might hold. and it might not. Just be careful when you're buying stuff like that, guys, because like if it came off for the 2002 bear market, that's different, right? Like if it was going up at all-time highs and then the bear market of 2022 happened and then it got crushed, that's different. But if an asset's literally been trending to the downside since 2018, that means something is very wrong with the company. And maybe it's I don't know. Is this, I don't even know if you're talking about the stock or this thing. Pancake swap? What the? Yeah, I don't know anything about this stuff. It's getting killed. It got killed. That's a rug pull if I've ever seen one. Rug pull. Yeah, leave it alone. Yeah, Vodafone. Yeah, we just talked about it. If you know something about it that I don't know, buy it, but it looks like garbage. I mean, all the way up there is just a few cents. They're not good. It's not great. If you know something about it, like I don't know, somebody's gonna fix the company, then yeah, you can look for buys on it. But man, it is busted. It's been getting beat up. They're just trying to scout half of a dime. Well, it's below the weekly open. I mean, it's below the weekly support. You can go ahead and start breakfast if you're hungry. Okay. Yeah, I mean, I can't even. I mean, there seems to be some old reason why price would be bouncing from here. Uh, you're at last week's open, so like that's it. That's all the technical advice I can give you. You know what I mean? That's last week's open right there. So yeah, you gapped under it and you're coming right back to it. We're just trying to scalp a nickel. If you entered on the open, you should have it. You're at 7 cents, right? You should have your nickel. I would probably get out. Maybe, maybe you didn't get in on the open. All right, but yeah, it's close. There you go. Now get out. You just got another penny move to the upside, tagging weekly support from underneath. This thing hardly trades. There's very little liquidity in it. There's more liquidity in it today than there was yesterday. So there must be some news happening on this or something. Bitcoin is literally trying to just screw with us, isn't it? Vodafone is Europe's largest telephone company. Gotcha. Good morning. Eat your strategy is the best. Thank you. If you can look at Baba. Uh, the Chinese Great Open didn't happen as the way everybody thought it would. And also, I don't know if they have yet, but they are going to tear this company to pieces. 5 different pieces, if I'm not mistaken. All right, so here we are. Yearly opening range. You've been making lower highs and lower lows. You are coming to an area of something. So I must have looked at this during this week here. Clearly it didn't hold. But it's back, but I wouldn't use that level anymore. So you tested last week's close and now you're getting a small bounce. I would like it if it got back above this swing high. Like, see if it trades above 91.11, comes back in for a retest of 91.11. If it holds, then you could be a buyer of it. Buying it here, this could literally act as a resistance, right? People could be just setting right here to sell. Especially if they bought and waited and got under, you know what I'm saying? Like if they bought the yearly open and they're underwater and have been, at this point, they're probably going to get out. Bitcoin getting ready to stop it. Well, there you go. There's your 5 cents. Good job. Bitcoin getting ready to make a fresh daily high. Why DXY is getting crushed. That is why. Euro USD should be going back up now. It is. So Euro USD and Bitcoin are not correlated. Right? They're not correlated. So let me do this real quick. Get out of there. Get out of there. All right. Let's do this. Let's just compare it. Shit, I did that wrong. Why is there 2 of them? It's not correlated at all. But it's pretty correlated. All right. So this just kind of shows you Bitcoin going down. So is the euro. Bitcoin finds a low. Euro, boom. After Bitcoin goes up. Trades sideways. Euro breaks down, comes back, tests the yearly opening range while Bitcoin trades down and sideways, down and sideways. Then it gets bought up here, bounces. Bitcoin bounces and been trading sideways. So it is a little bit correlated. All right. So that's why I want the euro to break out, as it could be good for Bitcoin, but it's not exactly correlated in the way that just because the euro is breaking out doesn't necessarily mean that Bitcoin will. Bitcoin already did break out and got sold off. So for whatever reason, it just, there you go. Fresh daily high. Just if your stop was setting right there, you got smoked. What is that? Old daily support there. I got some jacked up trend line going on here too. What is this? Oh, I bet I did it on the line chart. No? I bet I did do it on the line chart. And then TradingView just screwed it up. So there it is. If dollar's going to continue to go down, uh-oh, somebody kidnapped a child. That happens a lot here in Florida. I do not understand that. Most of the time, it's the daddy or the mommy that does it. Anyways, yeah, Bitcoin looks like it's going to be a scratch short today. Maybe. I don't know where you put your stop. But I would also, if it was going to roll over, I would want to see it do it now with some gusto. It also made a fresh high on Bitget. Oh yeah, if you guys aren't in America, and you want to be able to trade futures on the inverse swap contract like I do, I literally accumulate more Bitcoin by trading Bitcoin on the inverse swap contract. So I don't buy my Bitcoin bags. I trade my way into profitability, and then I just transfer the profits to cold storage. If you want to do that also, use the link in the description. Use code XTSC. They are running a promotion. I think that you can get up to almost $4,000 by transferring or just signing up, transferring some coins over there. But they don't accept US clients. I am trying to work on one that does accept US clients. Right now I'm talking to someone about L Bank. I haven't done any research on the company, but as of right now, I'm being told they do still accept US customers, but they're Hong Kong based. So it's only a matter of time, in my opinion. But if you want to look at them and give them a look, see, go ahead. But there goes Bitcoin. So it's more than likely going to roll over again. Just where, I don't know. I mean, it could here, but we'll see. I still haven't been stopped out, but it's not far from stopping me out. And that looks like a vicious hourly candle. And there is 1 minute on the close of this thing. So, yeah, looks like it wants to go higher. Other areas of resistance, 3404, that's intraday. Yesterday resistance, there's nothing in there. You got some 4-hour stuff here, but that hourly candle is going to be a strong close. Daily support, once again, should have just held that trade instead of closing it. Daily supports, guys. Keep an eye on those levels. Those are the levels that you want to be buyers. Typically the lowest one. That's May's high, so it's not exactly daily support. This is daily support right there. All right, the lowest one. Yesterday it traded right to it and closed right above it. Next area of potential real resistance would be 30506, and that would be yesterday's open. If you want to attempt another short, I don't do that. I take one trade. If it works, I get paid. If it don't, I take the loss. So today's basically a neutral day for me because I got long yesterday and took those profits and then shorted it, and that ended up not working out. So all is good. With that, we're going to go ahead and wrap it up. Oh, wait. What is your take on gold for midterm? All right, we'll do gold and then we'll wrap it up. Gold is another one that trades with the dollar. So it is affected by the dollar. If the dollar continues to be weak, then I would expect gold to hold a little bit of support. But it's that thing. Is there demand for gold right now? So, like, just because it trades against the dollar, it's not 100% correlated. If gold could be more in demand and still go up, even if the dollar's going up, right? It's one of those things. So, gold is affected by the dollar, but you can see here that people have been selling it. Now, the reason for this, if you look, it could simply be because people don't believe a recession is coming, as gold is usually what people look to invest in recessionary periods. However, if you go back to 2008, you'll see that gold was sold off with everything else. So, yeah. gold is just one of those things. Hit all-time highs and then rolled over for a very long time. And then we came back up and hit all-time highs again, and it's been trading sideways in a wonky range. If you look at this on the monthly, I mean, that looks like it was going to break down and see continuation, but it didn't. It shot right back up. But this was, I guess, from, I don't know, the war or whatever. But ultimately, on the monthly, it doesn't look bad. It looks like a slow pullback. The next area of weekly support would be the heat level down there at 1843 and then the ultimate support of 1810. So see how today closes. If it closes above there, then maybe this might be the area where it finds the bottom. I like that. Oh, Jesus. Why is there... Oh, that's why. I want this. I don't like that so much, but I do like this. All right. So watch 1919. If it's going to continue to go up, there was clear bearish divergence there. Clear bearish divergence on the weekly, but it took a long time to play out. So that's your divergence playing out. If it's going to go up, that's going to be your next area of resistance, 1947. But next week, if this thing closes above 1919, I could be a scalp buyer there and then just see what happens longer term. Because you can still scalp it, take profits, and maybe stop to break even, and then you'll have essentially a swing trade size left on, right? Because the only difference between day trading and weekly trading or swing trading is you take much bigger positions in day trades than you do on a swing trade, because you got to have a much wider stop for a swing trade. But this would be an area of interest for me next week, depending on how today closes. All right. Today closes under it, then scrap that. You tested daily support yesterday and got a bounce, closed here. Today you're getting bullish continuation, but you're in a daily res. So this day needs to close above it. All right. With that, we're going to wrap it up. Thank you guys so much for being here. Unfortunately, it did not work. It's probably getting ready to get into an area where it might work, though. So keep your eyes open, right? Keep your eyes open. All right. You guys have a fantastic rest of your day. Have a great weekend. And we'll see you Tuesday. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.